Quick reminder, this video is sponsored by the Black Friday month coupon code down below for the amazing programs on building your wealth with real estate, stocks, or making YouTube videos. Check those out down below and feel free to email me if you'd like to bundle up. Kevin@meetkevin.com. Hey everyone, Meet Kevin here. I'm pissed. I've been collecting all my paychecks this month after obviously paying my expenses, and I'm kind of sitting here dying to buy some stocks. Every freaking day has been green and green and green and green. It's literally August all over again. Like the people on Wall Street Bets who are like, stocks don't go down. This stock is up 20% and I'm gonna buy it because it just doesn't go down. They've kind of been right the last few weeks, and it's like, ah. It really feels like August all over again. And we all remember what happened after August. Well, September happened. See, the market crashed right after the Tesla bubble up for 20 days. That run up we saw leading into the Tesla split had a little bit of a bubble pop after Tesla raised $5 billion, leading to nearly a month-long tech sell-off. So what the heck is going to happen now? Is there any potential catalyst or reason for this to happen again? Well, I really kind of hope there is, not because I want anybody to suffer, but because I want to buy more. Shift and Lemonade and Etsy and Tesla, and heck, I'll even throw in some more Peloton if we get some discounts. But these companies are so expensive right now. I want more Square, I want more Qualcomm, I want more DocuSign. They're good, but they're expensive. We need some panic. We need some blood in the streets. And I don't want anybody getting hurt. I don't want any actual pain. I just want to see the numbers go down for a couple weeks so we can go shopping and then back up again, okay? That's all I ask for. So, what do we actually have on the horizon right now? Not only for the stock market, but also for the real estate market, because, geez, there's like no inventory right now. Real estate inventory was bad before COVID. Now, it's even worse. There's nothing to buy right now. It's terrible. And as a result, not only is the stock market euphoric, but the real estate market is euphoric, leading people to do cash out refinances on their houses and rental properties so they can buy more stocks at all-time highs. Well, there are a few reasons for this, and I'm going to hit the few reasons as to why this is happening, but then I want to also get into 7 important catalysts. This is where you're going to want to take out your calendar again and really document what could potentially be coming down the pike. So that way we're prepared and we know when it happens, how to react to it. All right, so in terms of why this madness is happening, let's be clear. Money supply has skyrocketed over 40% since March, thanks, well, in part to the Federal Reserve and their money printer. Want some more money? PPP loans, stimulus payments, fewer expenses as less people travel, and not to mention housing forbearance, which you could literally still get housing forbearance. What do you think people are doing with all this extra money? They're buying stocks. Like right now, still today, you could get 12 months worth of mortgage forbearance, which means if you ordinarily pay $2,000 a month, over the next 12 months, you could just put another $24,000 at $2,000 a month into the stock market. Go to metkevin.com/forbearance to see my guide on that. I got a step-by-step video on that. But that's one thing, one sort of explanation in terms of why the market's so euphoric. But the second thing is, I mean, it's obvious. The vaccine news has been absolutely superb. It's not just COVID vaccine news either. It's the fact that this mRNA delivery system for the COVID vaccine, which is the technology that Pfizer and Moderna use to basically insert cassette chips into your body with instructions for your body, those are game changers. Like, I've said this before on this channel. I want to make this really clear. Moderna and Pfizer, if you're going to buy pharmaceutical companies, investing in this mRNA technology could be a really good decision for the next few decades. Like, it could be a huge decision. The fact that the Moderna CEO is saying, yeah, usually a pharmaceutical company will do like 5 to 6 drugs in 10 years. Yeah, we might be able to do hundreds of drugs in the same time frame because of the mRNA technology. That makes you go, oh crap, the COVID drug is nothing. So personally, I'm kind of waiting for the COVID vaccine hype to go away. Basically, when all the day traders get out because they're waiting for the FDA approval. And once that comes and the traders get out and take their profits, who knows? We might actually be able to have some opportunities to buy into Pfizer and Moderna for a long run play. We'll see. But on top of those two things, a lot more money in the market and this vaccine euphoria, on top of that, we've got election dynamics that ended up turning out to be tense, but not violent. And there wasn't a big Democratic sweep, which was expected. We know this, right? This is kind of just recapping a little bit. I really want to focus on the 7 catalysts, which I'm going to hit in just a moment. But I want to say Biden is kind of reiterating this, because he's also now suggesting that he's going to keep super progressives like AOC or Bernie Sanders or Elizabeth Warren. He's going to keep them in Congress instead of potentially putting them into his presidential cabinet. And this is making the market more confident that higher taxes and big Democratic priorities might get backburnered until the economy is even stronger. So, and remember, the economy is definitely not the stock market right now, because the stock market is pretty strong. So what's it going to take to make this freaking market fall so we can go shopping again? What is it going to be? Well, usually for the market to fall, we need some form of a negative catalyst that sort of pricks the bubble, so to speak, and lets some air out. Most recent fall we had was right after the election, right before the election, when everybody was panicking that the election was going to be a disaster. I mentioned that, bad news usually isn't as bad as we expect it to be, and we're going to get so much more clarity once the election comes, that before the election I said, look, take 70 to 80% of your cash and put it in the market before the election. I'm glad we did that, but we can't predict the future. Okay, got lucky on that one. Yay. But what do we do going forward? Well, right now, we got to pay attention to these catalysts. Because remember what happened when Tesla went skyrocketing for 21 days in a row, which it does that, the 14 to 21 day skyrocketing cycle. Well, when it took a breather, it went 38% gone like that. It was fast. And it doesn't it doesn't take a lot to make the markets freak out. That's the other thing that can sometimes be scary. That's why I like being super heavy into margin, especially when things are so green. Be careful, dangerous. So let's talk about these negative catalysts. And let's order them by date, not by importance, because they're all important, but they have different degrees of importance. So we're gonna go through these by date. There are 7 of these. And it's really important that, well, you write these things down, but also make sure you get your 4 free stocks with Webull. Deposit $100 with Webull, get 4 free stocks worth up to $1,600. Use the link down below. You can trade after hours and pre-market hours by like 4 hours with Webull. It's awesome. And get your life insurance in as little as 5 minutes via the link down below as well. We're still in a pandemic, but you could still get life insurance. All right, folks. So first catalyst. The S&P announces their exact Tesla inclusion plan on Monday. We're expecting Tesla to potentially join the S&P 100 as well as the S&P 500. And on Monday, we will know exactly which dates index funds and indexers are expecting to make their purchases. Current rumors are that purchases may be due in 2 batches, one by December 14th and one by December 21st. Depending on their announcement, we might actually see some big shifts at Tesla after this information comes out. And once those dates come up, we could potentially see traders who are euphoric about this inclusion idea bail out and take their profits, which could be enough to let some air out of Tesla. And remember, the last time it happened, Tesla fell like 37%. So Tesla's obviously ran up like 50% over the last couple weeks here. We're on day 10 right now on a 14 to 21 day Tesla run cycle, as it seems to run in those patterns. But anyway, that is catalyst number 1. But really right now, you just want to mark your calendar for Monday. I think they're doing their announcement at like 5:15 p.m. After the market closes Eastern Standard Time on Monday. Whatever comes out after that, we can now use those new dates and that new information we get to mark some new catalysts for when Tesla might lose steam. Remember, I blame Tesla for the last tech sell-off. Then, the second big catalyst. Congress next week. The House of Representatives are expecting to hold votes on December 2nd. That's Wednesday at 6:30 p.m. How congressmen and women and the Senate respond to the votes being held in the House on Wednesday, likely regarding a government funding bill, but to potentially also a stimulus bill, we'll see, just rumor right now, will likely help us understand, well, the odds of actually getting the government not to shut down. And so, and on stimulus. So here's what we're fighting for. 3 things. 1, VA funding. That's kind of being fought on right now regarding this funding bill. B, renaming Confederate sort of symbols and names. And C, whether or not we'll actually see that stimulus package. So when it comes to A and B, we're not really expecting those to make a government funding bill fall apart and all of a sudden the government's going to shut down over A and B. And we're also expecting the stimulus package negotiation to kind of stand on the sidelines of the government funding negotiation. So we're really probably going to see the government pass a funding bill by December 11th. they think they're actually going to get something done much sooner because Congress wants to take off earlier than usual, mostly because there's COVID going around at Capitol Hill. They're like, let's just bang out the government funding bill and go home on vacation or recess, right? Not expecting the A and B issue, the VA funding issue, and the renaming issue to actually end up tanking the market because the government doesn't get a funding bill done because of that. So the current expectation is government funding bill, check. If there's anything that comes up next week, though, as a hiccup that says, we might not actually get the government funded by December 11th, and then we're going to have a government shutdown and we're going to lose 1 million jobs and layoffs right away, that would be bad. That could be a negative catalyst. So paying attention to Wednesday is going to kind of give us a little upfront look into what's going on based on how smoothly things go at the House, House of Representatives. So come Wednesday night, if it's like, House passed a funding bill and the Senate is expecting to pass the same bills, then there's probably no catalyst there because the market's already expecting this bill to get passed or group of bills, the omnibus spending package to get passed. Only negative news is going to end up turning into a negative catalyst there, which I guess makes sense. But sometimes you would think like, it's going to be good news. They passed the funding bill? Probably not. I think most of that's already priced in. However, the other thing is, if we get, as part of this next week voting session, some sort of bridge stimulus package, which Biden has been pushing for, and a lot of Democrats and Republicans are pushing for, and we see something that's like, hey, here's a new stimulus package. It's not as big and insanely large as what the Democrats want, and it's not as small and insanely tiny as what the Republicans want, but it's something in the middle. That would be good. That could actually be very, very, very good for the market. See, ironically, in this case, bad news on stimulus is basically no news for the market right now. The market's kind of already like, stimulus negotiations, it's a stalemate. But I watch them every single day, and this is why I do those videos every single day on what Congress is doing, because I want to see when the trends are changing, because that's going to be good to know for the market. Bad news, I think, is already priced in. Bad news on stimulus, no surprise for the market. If we get good news coming on stimulus, though, like new bill is getting released tomorrow, and this is what's going to be in it, and it's bipartisan, and you get positive commentary from Pelosi and McConnell, that could be a big push for the market. So I don't think stimulus is going to end up being bad, an issue for the market. The only way this whole section could be a negative catalyst really is if the government funding bill doesn't get passed, and there's some sort of reason we missed the December 11th deadline. But remember, the House of Representatives votes on December 2nd, so we'll see exactly what it is they vote on. We'll get to see what, people on both sides are saying about this, and then we'll know sort of a better idea of what the trajectory will be for this negative catalyst. Third negative catalyst. This one's serious. This one is one that I think could be all it takes to make the market bleed a little bit. Between December 15th, possibly as early as December 10th, I expect like right after the vaccine gets approved for distribution, I would not be surprised at all to see hedge funds start taking massive profits and rebalance and rotate into bonds. Okay, let me explain this. At the end of every year, hedge funds need to buff up their earnings on paper, their realized gains. Why? And don't do this personally, because that means you have to pay taxes. But remember, hedge funds don't care. They're just passing the cost on to you of the taxes, right? Hedge funds use their yearly returns as marketing tools. You get those pamphlets that's like, look at our capital group. It's up 80% this year. Those losers are only up 70%, or that dummy's only up 8%, right? That kind of like marketing brochure that everybody wants to put together, right now, the hedge funds are sitting in their marketing department going, well, this year we could do flyers that show we are up 89%. If we just get another extra 0.5% of increases, we could say we're up 90%. Oh, but should we wait for 100% up? Oh, that'd be good for marketing too. Like literally, these conversations are happening. They are planning their 2021 marketing to get everybody to invest in their hedge fund. These institutional investors selling to realize profits and then taking these fat gains and then rebalancing potentially into bonds, because bond prices have stayed really low relative to stocks. And a lot of these hedge funds say, oh yeah, we diversify, we do 20, 30% bonds or whatever. Well, they're gonna have to move money from stocks into bonds. at least a lot of these hedge funds and institutions have bond exposure. Problem here is they sell, rotate out of stocks, we could potentially see a softening in stock prices. Combine this with some other catalysts, hey, maybe that's our buying opportunity. Something interesting to keep an eye on. It wouldn't surprise me to see those high-flying EV companies and tech companies to take a back seat for a few weeks while this rebalancing takes place. Or everything will just go to the moon and none of this matters. We'll see. But mark it on the calendar. End of December can be funny. Fourth catalyst. All right, this one. We've talked about this one before. I'm going to keep this one light. This is the December 26th through December 31st. Extended unemployment for workers ends December 26th. Unemployment for self-employed people ends December 26th. People have to start paying their student loans again in January. The eviction moratorium ends December 31st. And other CARES Act provisions and bailouts end December 31st. Now, we'll talk about real estate in just a moment and the eviction crisis and all that and how that relates to stocks. But fear and uncertainty around these mass layoffs and people losing benefits could hurt the market. Though, honestly, the market is propped up so heavily right now by white-collar workers and white-collar spenders making more money working from home and spending less money on travel. And really, these are probably the people buying all the Peloton bikes. That it's quite possible that all these expirations at the end of the year will end up being like protests and riots were in June and July for the market, aka bad news, but something the market literally just shrugs off. Like, that sounds horrible, right? People losing their unemployment benefits and their eviction protections. Terrible for those people. For the market, it might just play right through that. Again, horrible, people suffering, but we're talking about the market. The market is, it's just weird. Okay, so keep that in mind. That will create uncertainty, that time frame between the 26th and the end of the year. There will be uncertainty because of that. But I think that alone is not going to be enough to really pull this market down, just because the market has this really weird attitude. All right, fifth catalyst. All right, this is an interesting one. The January 5th, the Georgia runoff and a potential Trump 2024 announcement. This is going to create a lot of uncertainty. If polling data, early polling data, shows that Democrats are likely to win the 2 Senate seats left in Georgia, the market could literally freak out under the potential, like bad. Okay, this one could be bad too. Under the potential of a 50-50 tie in the Senate, which could only be broken by Kamala Harris, who obviously she's going to vote for the Democrats. Meaning that we could see Democratic tax policies and Democratic appointments and Democratic judicial confirmations all happen with just 51 votes in the Senate. Now, the Senate can't do everything with just 51 votes. Most bills require 60 votes to get through the Senate, but they could do a good chunk of stuff with 51. Right now, the market is happy because it doesn't look like Democrats are going to get Georgia. But, if early polls show that Democrats are starting to lead, as misleading as polls can sometimes be, the market could start trying to hedge for a Democratic sweep, meaning the market may try to take money off the table. This would not be unreasonable towards the end of December, especially if the polls get close and then you start getting things like, Trump going, hey, we're now rallying for a 2024 election. We're going to go campaign in Georgia. What that's going to do is going to set off Biden and all the other Democrats to come to Georgia. It's going to be all the rage for like a week. The news of what happens in Georgia and what if we have recounts in Georgia again. That's going to be a stressful period of time for the market. Mark that one down. It's already stressful just talking about it. Number 6 catalyst, the real estate eviction crisis. Okay, this has to do with housing, but it is also going to affect stocks. So listen to this one. If we get an eviction crisis, I do not think we are going to see a foreclosure crisis. But, I do think there is going to be a V-shaped decline, not like that V-shape up we usually talk about. I'm talking about a V-shaped decline in real estate prices for the first 6 months of 2021. So first 6 months of 2021, if we have an eviction crisis, we could see a V-shaped decline, a pullback of around 10 to 15% in the short term. I do think that real estate is going to flatten out or grow next year, but this potential eviction crisis leading to, my guess, 1 to 2 million more units of real estate inventory coming on the market, or like 15 to 30% more inventory, could really be an opportunity to go shopping for real estate. Right now, it's like you can't buy anything. There's like nothing on the market. It sucks right now. This is why I'm sending postcards with Deal Machine. Go to metkevin.com/deals to get your deal with Deal Machine. Check it out. They're a good company. But no, seriously. The last time we saw the real estate market get hammered was in the summer of 2018 when Jerome Powell was like, we're gonna raise rates. That pissed off the stock market, the real estate market a lot because home prices fell like 10%, like instantly, 10 to 14%. It was crazy. The stock market actually followed this news, but the stock market was a lot slower because, well, real estate data's slow. Like I started calling the real estate crash coming, well, being here because I saw it happening in real estate every single day in May of 2018. Really wasn't until like August or September that the news really started reporting how much real estate home prices had fallen, which then led into, the same time as us having China trade tensions and a real estate crisis. It's kind of like this slow-moving giant ogre changing directions. I'm going down. Yeah. Free upfront warning, I guess. That's why I watch it very closely. But when you had those things combined, you ended up having a pretty bloody November and December in 2018. Now, like you zoom out in the last 10 years, it doesn't really matter. I mean, we're talking about, do we want to buy this month or next month, right? We're really just, we're looking into this small lens here of what's going on right now on the day-to-day. But, yeah, these are things that can help us get really good buy entry targets. Last thing we want to buy or do is buy like way at the top and then have no returns for the next year. My POV at least. Okay, so that's catalyst number 6. Which, by the way, if you like my perspectives, there's no reason for you not to be a part of my live streams every morning. They're like 30 minutes long. Every day the market is open. We talk about what's going on today, what my moves are, which stocks I'm looking at. You pay once and you're in it forever. Any of the courses linked down below can get you in, so check them out. You'll love it. And you can also watch them on your own time. Like you don't actually have to be there at the live stream. You can in fact go all the way back to my March live streams if you wanted to, kind of see what that was like. Feel like I'm putting money in the fire pit. Anyway, as a 7th catalyst, we have the R word coming again. We might see a recession in the first quarter of 2021 as we weather the storm of COVID. I don't think this alone will cause the market to fall dramatically because we kind of already know it's coming. But if the market's already declining because of madness happening in Georgia and maybe Democrats leading or Democrats winning in Georgia, and then on top of that we get an eviction crisis, we could really see quite a few of these catalysts compound right around Christmas and, well, January of 2021. We could have some real pain in the market. Oh, and number 8, this is kind of like an honorable mention, even though it's not really honorable. Obviously, if COVID cases go nutso and it takes us long to get vaccines, longer than expected, and more people start dying because we get way more cases and we break that 200,000 count consistently through December and January and things go nuts with COVID, obviously we know that's just going to amplify any of these other catalysts. This is why a lot of me right now on my strategy for investing is, bottom line, kind of my strategy for investing right now is when the market is euphoric, I pay off margin. That way, any margin I used, I pay that off and I have it available in case the market falls again. I could always pull my credit lines again. I got all my rental property lines of credit paid off. I'm gonna be paying off all my margin within the next 4 weeks again. I pulled it a bit to buy some real estate, but I'm done right now. I got no other purchases going on. I do have to finish out one, but I'm not buying anything new right now. I'm kind of just on standby. Like, okay, let's get these things paid off and let's see what we got. Where can we go shopping again? Now, if you don't have any debt to pay off, potentially what you do is you invest your money into metkevin.com/basket. That's really just a balance of index funds. So that way, if the market crashes, the index funds, index funds usually don't crash as much as the individual, like the high-flying tech stocks do. You might see like the Dow or the S&P go down 2 to 3% a day, where you see certain tech companies fall like 10 to 20%. This is why sometimes I like keeping cash over at the basket. And then sort of as the market declines, you rotate your money from the basket over into these discounted tech stocks. Something I like doing during the euphoric times. But as always, minimize that debt first. So there we have 7 catalysts. We've got what's going on, 7 catalysts for a market decline, and my strategy right now. And this was a bit longer, so if you made it this far, consider sharing this with somebody you think would benefit from the information in this video here. Get your 4 free stocks, get your life insurance, and as always, check out those courses down below and join me in the live streams. Thank you so much, and we'll see you next time.